Hello and welcome to another Market Outlook Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and today I want to show you a little technique that I use with the 10-day simple moving average to identify markets that could be turning more quickly than we would otherwise identify them with the 50 or the 200, which is our phases concept. And if you don't understand or not familiar with our ranking of markets by market phase, you can find more information about that for free in the help section of this little big view area. So the green line here is the 10-day moving average, and the markets I'm picking on today are the energy markets. So it's no surprise, I'm sure, that you're aware that the oil has basically collapsed over the last 6 months. So we're looking at USO. This is an ETF that tracks oil, and you can see that it's gone from nearly 40 to almost 20 in about 6 months. And if you take a look at the 10-day moving average, you can see that for the most part, this market has been completely unable to make any headway above this moving average. So I'm not a big fan of trying to pick bottoms and catch falling knives, as the expression goes. But this moving average, when you know how to use it, really can help you identify turning points if you want to try to pick a low or even pick a top, whether it's to enter a position or to get out of a position. I use it for both. Much before the 50 or the 200 or many other moving averages ever come to play. Now I've started with USO here to illustrate the fact that the commodity itself has not yet moved above the 10-day moving average. But I'm doing this video because if we look at some of the ETFs, and I'm going to start with the OIH because it's the OIH that I like in particular because of the pattern, you can see that we've got a situation where it has in fact come up over the 10. Now admittedly, the same thing happened around here, right? But this is a different pattern. In fact, this is more like, in fact, it's not even this pattern either. This is the pattern you want to look for. Right? It's been trading under the 10 for a long time. It breaks out decisively over the 10, and then it corrects back and essentially holds the 10. All right, so if it were to hold in a range that was defined slightly under the 10-day moving average, and let's say the lows were down in here, that would be okay too. But we've got a really nice looking flag here, right back to the 10 after a big thrust through it. So the trade here is to be a buyer. Once it starts to break out. In fact, I bought a little to get started on yesterday. It didn't close in my favor, so I'm not happy about that. And oftentimes when you get these trades, what you're really looking for is the resumption of this thrust. So in this case, we had 3 days where the prior high was not broken, and then yesterday we broke the high, and I think I actually got an opening range reversal yesterday, which is why I was in a little early. I don't know that it broke out from the opening range. Had it broken out from the opening range decisively, it would have been better. But my stop is down in here. So as much as I don't like to catch falling knives, as I just said, this is one way to kind of probe the markets before they really start to turn and get going. And from a swing trade, it's a really tight stop. You got these lows in here, and actually I like to use prior swing areas, so I might give it all the way down to here on some of it. The objective here could easily get back up to 40 relatively quickly, and with any luck, maybe this was just a huge flush here. If you look at the weekly charts, you can see that OIH is, and I'll do that, OIH is down near some pretty historic levels, or historic, certainly going back 3-4 years. These lows are being tested. So like I said, even if it just bounces back up to 40, the risk reward on this trade looks good. And more importantly than this one particular trade is go back to the daily, is this pattern of looking for that 10 to turn and the first retracement to it, and it should just start to make its way higher. If it heads lower, its time is not right. As with any trade where you're going against the major trend, you got to get out of the way. Don't be a hero. Hope that helps. I'll see you in the next video.